Hi guys, welcome to Money Theory. In today's video, we're going to talk about credit cards. So, Americans in general have been struggling with credit card debt, and it's an estimated of $1 trillion in total credit card debt. The average interest rate on a credit card is about 20%, and that's lower to maybe only the payday loans, which are around 300 to 400%. This is one of the largest interest rates that you'll get in your life, larger than a mortgage, business loan, or student loans. And that's larger than the average stock market return, which is around 7 to 10%. So it is a bad decision when people focus on investing while still carrying a card balance. Interest only accumulates if you keep a balance at the end of the month. So using the credit card is okay, even with the high interest rates, as long as you pay it off. Spend with money that you actually have. Treat it like a debit card. However, spending money with the hope that your next paycheck will come is risky. This is because in case of a recession, you have a risk of getting laid off or fired. And here's the graph of the total outstanding credit card balances, and you can see we're at the highest points in history. Here's an example from NerdWallet. We're starting off with an initial $10,000 balance, and will compound daily at an estimated rate of 20% annually. After 1 year, you'll get about a $12,000 balance. After 5 years, that $10,000 turns into $27,000, and you can see the green part is the interest. Then after 10 years, that $10,000 turns into $73,000, and the interest on the graph is a significant portion of your balance. So this is the opposite example of how dangerous compound interest can be. But regardless of the risk, there are still some benefits. First, let's start off with fraud protection. It's safer than a debit card or Zelle and Venmo, and banks have data analytics that can detect unusual expenses. Scammers accessing your credit card can't take money directly from your account because the banks can reverse the fraud charges easily. However, if you were to pay with Zelle or your debit card, that's directly accessing your bank account, so the money is already stolen. Next, your credit cards also have reward points and cash rewards. It also builds up a credit history, which will help you with larger loans like mortgage and business loans. Next, we'll talk about credit scores. The scores range from around 300 to 850, and the lower range is poor credit score, and the higher range is exceptional. So your credit cards have a credit limit, and that's the max amount that you can charge on your card. The credit utilization is the percentage of your limit that you have charged at any time. For example, if your limit is $5,000 and you're carrying a $2,500 balance on the card, you are currently having a 50% credit utilization. They typically recommend a 30% is best rated credit score, but a high utilization rate doesn't really hurt you if you pay off your bills in full every month. The next thing that affects your credit score is the credit history, and this is the average age of your credit cards and also the age of your oldest credit card account. So they typically recommend keeping your credit card account active even if you don't use it. This avoids shortening the average credit history. So it's important to plan ahead on how many credit cards you would open in the future. Opening a card just because of the sign-up bonus is not wise. There's also another concept called credit card churning. That means opening new cards repeatedly for the sign-up bonuses and the initial low APR. Usually they waive the interest for several months, and also they would waive any annual fees for several months. And then when you are near the end of that initial period, you can sign up for a new card and pay off that balance. But there's risk to that because having so many accounts can hurt your credit score, and it's adding more things to keep track of. So if you mess up, like missing a bill or defaulting on a credit card, that'll also hurt your score. Hi guys, I hope you enjoyed our video. If you'd like to support our channel, you can check out our Patreon or buy me a coffee. Be sure to also check out our Instagram and YouTube accounts, and to comment, like, and subscribe. Thanks for watching.